Welcome to the Tax Awareness Show. My name is Shili Boy Mutiba. I'm your host. And today I'm having a conversation with Neil from Business Partners. Neil, welcome.
Thanks, Shili Boy. Thanks for having us.
How are you doing?
I'm good, thanks. How are you?
No. I'm doing great. For someone who doesn't know, actually, who is the Business Partners?
So Business Partners is the entrepreneur's financier. I think we were established in the 80s. We focus on property finance, business finance. We also do a lot of mentorships, and we have some exciting funds that we also manage.
Is it? Okay. So what do you do at the Business Partners as Neil?
Yeah, so as Neil, I think at Business Partners, what I do mostly is go out for breakfast, speak at events. But I think on a more serious note, so I am the area manager for the Southern region in Gauteng, part of Fund 1. So under me, I have 5 people who report to me, 5 deal makers who report to me. And what we do is we structure deals. We place money back into the economy. And I think what our main thing is to support SMMEs, first of all, to grow, to create equity. So, for example, we have a product where we fund 100% of a property value for a client who wishes to own and instead of leasing. And that, in 10 years' time, creates equity for the entrepreneur, and that way they can grow.
Supporting and enabling SMMEs growth. What would you say is the most exciting thing about your job?
Yeah, so I've been thinking about that a lot because I recently came back to Business Partners. I think I joined back 2018, left the stint with the banks, and I think something just drew me back. I think it's the feeling you get from giving back to businesses, seeing the impact. For example, 2018 I invested about 30 million rand into a business, into somebody's dream, and coming back to Business Partners now and joining and seeing this dream being realized gives me a sense of achievement, a sense of completeness. So I think that's what I enjoy the most, is helping people change their lives, helping people create jobs. You employ one person, give them the ability to send their kid to a good school, also to university. And from there on, you change the trajectory of families. And that's what I like about it.
That's social impact investing.
Yes.
Like it. Okay. So in you structuring deals, I mean, you speak about structuring deals on a daily basis for SMMEs in particular, right? What would you say, how are you guys considering the issue of tax? Because the truth of the matter is that when deals are structured, there's always tax side of things. How are you guys supporting the SMMEs during that deal structuring?
So with deal structuring and tax, I think it all goes hand in hand. I think sometimes what we see with the entrepreneurs, especially with the smaller businesses, is that there is a lack of compliance when it comes to tax, and that affects their ability to borrow money from institutions like ourselves. For example, part of our due diligence, we look at financials. What we then do is we compare the financials to your ITA 34, which is your submission to SARS. And any deviation there already casts doubt on your integrity as an entrepreneur, the integrity of your financials, and that hampers our ability to lend to you. We've also seen issues, for example, with our property deals, where we structure property finance at 100% over a 10-year period of 120 months. And at the same time, with the transfer of property, there may be VAT that needs to be paid. So what we do is, to assist the entrepreneur, we structure the VAT portion over a 12-month period. But what we've noticed is that the clients usually take longer than 12 months. And I think maybe that's where you come in as a tax specialist.
Look, I mean, obviously it's not a secret that I deal with some of the clients that will then go and borrow money from Business Partners. And I mean, speaking of structuring deals, VAT consequences during the acquisitions of the properties, or infrastructure that you guys will typically finance, what I've seen and in my experience is that there's poor cash flow planning. And maybe let me give you a practical scenario. A business partner, for example, will finance someone who's going to build, let's say, school, or let's say, for argument's sake, a small commercial property that they're going to own, or rather occupy as the owner of that particular property for manufacturing, as an example. What I've noticed is that you will find that you guys register that property, and you'll tell me if I'm correct. You'll register that particular property in a newly formed company.
Yes.
Before I even go into the tax consequences, rather, what makes you guys to rather prefer to structure these deals in a newly formed companies?
So I think the main reason why we place it into a newly formed company is, number one, it's how we structure the deal. And number two is also any contingent liabilities. We don't want anything creeping up to the entrepreneur the 10 years down the line to find out that there was an issue with SARS that now comes to light while you are in the process of finishing up your loan with us. Number two, as I said, it's the way we structure deals. So we typically we buy the property into a new company. In that company, the entrepreneur gets owned 65%, and we come in as a minority shareholder, owning 35% shareholding. But the entrepreneur is an option to buy back the shares from year 3, which is a put option. And the reason why we structure in that way, you'll see that traditional financiers will only finance a building at an LTV of, say, 80% or 75%. We come in 100%. And I think it's this type of structuring that allows an entrepreneur who was not able to purchase his commercial building where he's renting from, it gives them the ability to purchase that building.
Okay, I'll come back to the concepts of the LTVs and the financial side of things. Maybe let me go back to what I was saying. Yeah. Let's say now you articulated why you will put this particular property in a SPV, which is special purpose vehicle. It could be a company, it could be a partnership. It's just the terminology for special purpose vehicle, right? Now, let's then take that particular, let's say we're constructing a commercial property. What most people actually don't know is that you can actually, where provisions allowed, you can actually register for VAT during that construction phase. And we've done that. We helped some of your clients, as you will know, and where it's better if you qualify to register for VAT as a vendor. You can actually register during that construction time. And it helps with cash flow in a sense that you may find that you've got suppliers and contractors that are actually VAT vendors, which means that there's an amount that you're actually paying to these guys that is inclusive of VAT. So if you're not registered for VAT during that process, during that construction, you would agree with me that there's quite substantial amount of money that actually goes out without you guys recovering that. But that's one side of things. You also spoke of those actually who say buys already existing brown property, like brownfield property, in a sense that they come and say, listen, Shilly boy, I'm in a commercial space. I found this property, therefore I'm buying it through business partners. But then because you guys requires these people, entrepreneurs rather, to actually invest in a newly formed company, right? Which means that typically that company is not VAT vendor.
Yes.
Right. Now, there's a tricky part where you find that upon acquiring that particular property, this VAT vendor now is sitting with a situation where they may be obliged in terms of the VAT Act provisions to actually register for VAT, right? If they're making taxable income that is more than R1 million, or they're expected to make taxable income of more than R1 million, right? Those are the compulsory provisions. But the equally so, remember, there's that voluntary registration where if someone is expected to make more than 50,000 or they already made more than 50,000, they can voluntarily register to SARS for VAT vendor purposes.
Okay.
So what we found is that most people actually also are not aware that you can actually claim the VAT in relation to the assets that you acquired before you became a VAT vendor. So there's also that where people actually are logically losing money, legally so losing money that is sitting on, and that's have been my experience. I mean, you would agree with me on this, because that's one of the things that inspire this type of conversation, so that we create an awareness to you to say I can actually legally so plan your cash flow in a more reasonable manner. Earlier on you mentioned things like LTV. If I go further in structuring these deals, you mentioned financial statement, and I know dealing with you guys is that financial statements are one of the important documents that you require when you are funding. Why financial statements are so important to you as the lender, as business partners?
So I think with regards to financial statements is the roadmap. It is the map you have plotted since starting the business. So I always believe that numbers don't lie. Numbers tell a story. So the financials will tell us a story about how successful you've been historically, and that we look at your retained earnings position. Number one. The second thing I think is also we look at the revenue. Is the revenue growing year on year, or is it decreasing year on year? If it is decreasing year on year, what is the reason for that decrease? Is the business making profits? Is the business making losses? What is the reason for that? We also look at your expense to income ratio. I mean, you can't be drawing 5 million rand per annum out of your business, coming to me as a funder and expecting me to invest into your business, where you're taking money out as a loan, and that also has its own tax consequences.
Oh, of course, it does have those tax consequences, and that's typically what I found also in practice, where SMMEs freely so, willingly so, unknowingly so, they ignore the tax consequences of taking money out of their businesses. And I always tell entrepreneurs to say, where before you actually take money out of your business, always be mindful of what is that money. Is it a loan? What does the Companies Act saying about that particular loan amount? When are you allowed to actually take money? And also, if it's a loan, are you charging yourself any form of interest? Because should you not be charging yourself any form of interest, it could be interpreted as if that particular money that you withdraw from the business is actually a dividend, right? Which could actually later on leads to potentially dividends tax that you should have actually paid over to SARS, and you had not paid, which means that you could find yourself being subjected to penalties because you did not actually, you defaulted in submitting or paying over to SARS a withholding tax, in this case dividends tax, that should have been to paid to SARS, right? So there's a lack of awareness around SMMEs, because most of, or rather some of the SMMEs are in the main owner managed, and you find that decisions are just made. You make decisions alone. There's no board, or the governance structures are not so enhanced. Therefore, people tend to make this kind of mistakes. So I think that's why I'll encourage people to actually consult before there's any form of movement of money between themselves and the businesses, that they actually be mindful of the tax consequences. But using the financial statement, or rather getting these financial statements from these enterprises when you guys are evaluating for their funding applications, what is more important in those financial statements? Of course, I mean, every number tells the story, but you as the lender, what are the most important figures, and why are those figures so important to you as the lender?
Yeah, I think so. On our side at Business Partners, we look at things a bit differently. So as you'll see, our logo says entrepreneurs financier. So we tend to back the jockey. But at the same time, the numbers or the financials also tell us how strong is this particular jockey. So things that my team looks at, number one, we look at your retained earnings. I think importantly, so we also look at the cash generated from operations, because that for me shows the true amount of money that actually flowed through your business. When we look at the profitability, we look at net profit. So we take your net profit, we divide that by 12, but we look at the previous year, because what we tend to see is when entrepreneurs come for funding, they were making 2 million rand in 2024. And when they approach us with management accounts, all of a sudden the business is making 15 million rand or 7 million rand. it becomes crazy. So, and that's why we rely on the accountants. We rely on the report of the accountants. And what we've seen is that, I know with entrepreneurs, cash is king, but not enough money is spent on the right services. For example, with tax planning, with tax compliance, with financial statements being accurately prepared. I mean, if you employ an accountant that does not care about your business or that does not have sufficient experience, he's not going to tell the correct story to me as a funder. And when I read it, I will say, oh, this is another dud. But when I come out to see your business, it shows something completely different.
It sounds like you've encountered a lot of questionable or poorly prepared financial statements, and you already alluded that it sometimes it's influenced by entrepreneurs trying to save money on paying the right accountants, or rather those accountants that you can be assured that they will be competent in delivering their service that is right. So now my question to you then is, having encountered these poorly prepared financial statements, what has been the solution that Business Partners offers to these enterprises? And also, what would you say are some of the reasons that results in poorly structured? I know it's a couple of questions, but the third question is, you gave example that someone comes in with having made 2 million 2 years back, but then in a year that they come to approach Business Partners, now they're making 50 million. What has been your experience of the drivers of those items?
So I think to answer your last question, the biggest driver there is desperation. And also, as I think black businesses in this economy struggling with access to funding. And I think that goes hand in hand with not knowing how to access funding, number one, and also your compliance. So I think that goes hand in hand, and that makes it so difficult for us to assist you as the entrepreneur. As much as the team always tries to do their best to unlock the funds for the entrepreneur, if the financials are not in order or the compliance is not in order, it becomes extremely difficult for us. I had a business in December, for example, very well-known business, deals with A-rated clients, but the financial statements were not prepared correctly. And what they did was to try and disguise the insolvency in the business. They did a loan to the shareholder and classified it as a current asset, for example. And when we strip that out, it shows you a completely different picture. So that's like the struggles that we see, the struggles that we face.
I mean, my follow-up questions will be, what support then do you provide to these entrepreneurs? Because you mentioned that there's an element of desperation, and you take the desperation out, you deal with, you may find that these enterprises actually can be viable. What does business partners actually provide as a support to these enterprises?
So we actually have an exciting product that's been around for a number of years. It's called technical assistance. So technical assistance product is a zero interest loan, typically done over 48 months, and it's coupled with a traditional business partners loan, and that can be a property loan, a business finance loan, where we finance working capital, asset finance, short term, you name it. We couple that with the loan, and that can be used for anything. For example, bringing in a specialist to review your business. So we do have mentors that work with business partners, and these are experts in their respective fields. It's also retired business owners who are passionate about the industry, who are passionate about what's happening in the industry. And through that loan, you can then use that cash to bring in an expert. So we'll walk the journey with you. We don't just say no and then walk away. We walk the journey with you. We'll introduce you. We'll go as far as to introduce you to accountants that we've worked with, that we trust, auditors that we've worked with, specialists that we work with. And through that, you can use that cash to serve us, to pay for that service.
Which is brilliant. Yeah, because you hold these entrepreneurs' hands to ensure that they actually move and they grow in their respective industries. But tell me, having requested financial statements, have you encountered scenarios where some of the entrepreneurs, they've been operating for years, but they don't even have financial statements?
There's some who don't even have any financial statements. And that makes it so difficult, because what they do is they trade in a company name. They haven't prepared financial statements for years. And the sad thing is, because of that, your ability to lend becomes 50% to zero. Or what it does, it increases the time taken. So for example, if your business needs working capital, cash for working capital now, you've gotten a big contract of 20 million that can change the trajectory of the business. And now you're stuck because you don't have financials. So now we need to go through that whole audit process, putting financial systems in place, because we can't rely on the information that you give me. And as a deal maker, what I've seen when I was an investment officer, if the client will send you bank statements, but this is hundreds of pages, and expect you to put together financial statements for them, which is not fair. But as deal makers, we try. We try to put it together, but we go to committee. We cannot rely on the information.
Correct. And I think one of the things, I mean, you're correct that you have encountered those entrepreneurs that don't even have financial statement at all. And it worries me, because I've seen that in practice also, where someone doesn't really, or whether it's out of not knowing or intentionally so, but what they don't realize is that there's huge, serious tax obligations or tax penalties that are more than likely going to happen when they submit these tax returns, or rather when they submit their tax return that they should have submitted in the previous years. So yeah, it's quite worrisome that people actually, till to this day, they do that and they still don't submit or rather prepare their financial statements on it. But in your experience, what are the reasons for these guys not to prepare financial statements?
Shitty boy, to be honest, I have no idea why they wouldn't do it, because the financials give you a summary of what's actually happening in your business. Are you really making money? Do you see all of these orders that are coming in and that you are pushing out? Are you making a profit? Or are you picking up any irregular expenditure? All of these little nitty-gritty things that the financials, or that the story that the financials tells you, you don't see. So it concerns me that there'll be entrepreneurs who do not prepare the financial statements. A lot of the ones to be fair, a lot of the ones who don't prepare financial statements are usually asset holding entities, but they're earning rental income, so, and not declaring the tax to SARS, which is not right. It just is not right. It's unlawful. It's illegal. It's not right. So I don't know what we can say.
I think the unfortunate part, and maybe let's talk about the importance of financial statements, be it that it helps you with the tax compliance, it makes you avoid unnecessary penalties when it comes to SARS, because we all know that, let's say, for example, you don't put your bookkeeping, you don't do it correctly at the right time, you're more likely going to not to meet the deadlines that are prescribed in the legislation, in the tax legislation rather. You may find that you have to submit VAT at the particular point in time and you're not ready because your financial statements are not done correct, meaning that you're most likely going to get those 10% tax penalties on amount that you're owing to SARS in respect to VAT. So it could be provisional tax, it could be pay as you earn, it could be various form of taxes that you're more likely going to get tax penalties as a result of poor financial environment controls. But also you are denying yourself an opportunity to make strategic decisions.
Yeah.
Financials helps us to make strategic decisions. It helps you to know where your business is. It helps you to unpack where you're going with your business. Which areas are you spending most of your money that you could perhaps look into? An efficient bookkeeping / strong financial statements can help you with forecasting, and that's very helps with budgeting. But it also helps with lending, because if you've got quite good or well-prepared financials, it makes people like you, Neil, not to be reluctant to fund these enterprises, right? So that also is important. But what mistake also some entrepreneurs or some medium-sized enterprises, they forget that at some point, at a particular point in time, they may require external investors to come into their business. If I come into your business and I want to do business with you, and you're actually not even having financial statements prepared over the last 10 years, for argument's sake, it's going to worry me to actually to want to invest in that business. It's gonna, and also even valuations. How would you value your business if you don't even have financial? Because financials are starting point of evaluating a business. So if you don't even have these financial statements that have got integrity, how would we even value? Because we could be valuing the business for succession planning purposes, and we'll speak about issues around succession planning in other episodes of the show. But I think that's something that people forget, that when you go out there looking for insurances for businesses, they'll want valuation for this particular business. Therefore, it may disadvantage you if you actually don't have that. But what will you tell these enterprises the important? I mean, I know I already covered some of the things, but what would you tell them how so important, in summary, the financial statements are to them?
Yeah, so I think how you should look at your financials is basically as the Bible for your business. I think if you always want to be ready, and in that way not put yourself in a disadvantage. So opportunities, we know opportunities come along every day, but you don't want that opportunity cost to be the cost of losing a 60 million rand deal, or the cost of running a business for 20 years and along comes a buyer who will finally give you back your sweat, your equity, the stress that you've pumped into the business, and give you that monetary reward by buying out your shareholding at an accurately valued amount. And that's what you put yourself as a disadvantage, and you can even look at it as you are stealing from yourself. At the same time, it also gives you a point to start it in terms of managing your business. So as you alluded to, where are the leaks in the expenses that you are paying for? Is Neil in my company earning 3 million rand and his output is 1%, and he still also has the petrol card? He has all of these benefits, and he's going on holiday using the company card, for example. Those are things that you won't necessarily see, because then it would stand out like a sore thumb, and like travel or accommodation would stand out as a sore thumb, and you'd look at it in your financial statements, and that would tell you a story, and immediately you'd start to investigate. So if you don't prepare it, there's a lot of leakages, and as I say, you're putting yourself at a disadvantage at the end of the day.
Thank you so much, Neil. In closing, perhaps, what are you looking forward to in 2025, and what would you say are things that small and medium enterprises needs to look forward to coming from business partners?
So business partners, I think, be on the watch. We're launching an exciting fund. It's coming through, I think, in April. We also have a new dynamic managing director, also a new chief investment officer. Both are young, both are invigorated with fire, which gives me, it gives me the motivation to also push on to pursue. I've been working closely with you, and the businesses or the deals or the leads that we've received thus far, we welcome, because the job creation, number one, even how small it can be, how small, but the impact we're making, it impacts a number of lives, and the knock-on effect on this is long term. And I think for me, this year, 2025, I met with a client of mine. He said, this is the year of Jubilee. So speak it into existence, take what's yours, because it's going to be a great year. 2024, 2023, and COVID years, we've all struggled in our own ways. But I think 2024, with what I'm hearing on the ground, it's going to be exciting. Hopefully my team, I think we want to be national top performers. So our focus is going to be women-owned businesses, Black-owned businesses. We're going to try and reach them in the remote areas in my region, for example, Waterville and Viljoenskroon, which is deep south. And I think focus on female empowerment. For me, there's not enough representation from females, and I think females have, most times they have their heads screwed on better than us men. So yeah, but I think I wish you all the success. And I also look forward. I think SMEs are also not represented well. And when we look at the budget speeches that are coming up, we can only hope that there will be somebody who's going to focus on the SMEs and how the changes in tax and the budgets are going to.
Correct. Speaking of the budget speech, and that is coming up, we, as the tax awareness show, we look forward to the budget speech. We're hoping that we'll break down the budget speech and after it has been delivered. And we're also hoping that we'll be having a breakfast show around unpacking the budget speech as the tax awareness show. And equally so, 2025, I look forward to the tax awareness conference that it's coming up. So if you are medium-sized enterprises, or you are one of the stakeholders that are interested in the field and you want to know more about the upcoming, the Tax Awareness Conference, you're more than welcome to reach out to us. And from myself, as the host of the Tax Awareness Show, thank you so much for watching so far. And if you've got any comments or you've got any views and support, or you want to collaborate with us, you're more than welcome to reach us to us rather on WhatsApp 074-589-6439. And yeah, you can email us at info@taxedu.co.za. By the way, how can people reach you?
Oh, so people can contact me directly, 061 483 4744. Or you can go into our website, click apply, and then just follow the steps there. I think my email address is very long, but it's basically nlottering@businesspartners.co.za.
Okay.
Otherwise, find me on LinkedIn.
Of course. Yeah. And then, or you can reach out to us and we can definitely assist you in getting hold of business partners so that your business can grow and can create jobs. That's very, very important. Thank you so much for watching. And my name is Shilipa Mutiba. Thank you so much for Neil for coming through. We appreciate you and we appreciate business partners for coming through. Good day, good evening, good morning. Have a great one.